Okay. Hello, everybody. Good evening. Hope you are doing good on this nice and smooth Friday, or trophy Friday, for what matters here. So, who is in the comments? Hasta la vista. Good to see you as always. Jenny is here as always as well. Great. So, oops. Yeah. So. Just to start here, well, we sweep the low here, but like just a tick, right? Come on, did Logitech bugged again? It's really one of the worst software I used. It's very useful. They make very good mouses. There's a lot of nice shortcuts on the mouse, but you need their crappy software that always bugged out. Okay, thank you. Really need that. Anyway, so we did sweep the low, but like just a tick, right? I don't know how much, in fact, but right, it's just really a few dollars here, and getting quite an engulfing candle, 401 here. Looking not bad if we just look at the candlestick here, but for now we are in this small range here. Well, weekly range, in fact, right? We opened here. No, we end up Sunday with a big pump. We opened here. We put the Monday high, Tuesday low here, and we're just evolving inside the weekly range. So I'm gonna share you a few options. Ultimately, yeah, there's a lot of options here from the optician perspective, but I think we're pretty close to a significant move, and I will talk about that. And so for now, I will still be more inclined to short below Monday high. We have weekly open here. We have high volume node of the range, and it is high volume node, from the order range here. Depending of the tick size, the ticker, it might even be the POC still. I think it is on my aggregated spot chart. Nonetheless, it is an important volume level, right? So yeah, I'm more inclined to be short here, and if we do a deviation of yesterday high, Thursday, yes, yesterday high, yeah, that will still be a short for me. So here I put the fib extension tool from low high to low, because we have a three wave move here. So approaching that with an AUTF in mind, this should be corrective still, especially as we took the low here. Well, the only way I can see this as a corrective, and we take back the high here. So that means we have a complete structure right here, right? As we took that intermediary high, while it is with a flat. I'm not saying with 130, I never do. But yeah, that's what I will look for. For sure, it's preferable when each of your wave takes similar time. So the move up, the move down is kind of fine. About the same time, a bit shorter for the move down. But that one is a lot quicker. That doesn't change the fact. For now, I'm looking a lot at open interest, because it has been setting the high pretty nicely. We are seeing a nice increase in open interest again for the past hour and a half here. So yeah, it could be again a bull trap. As you can see, so I shared that into Discord this week. I mean, you may have seen it somewhere else. In fact, Jenny is the one that I highlighted back to me this week. But you can see how each of the high here, when we reach about 8 billion, about 9 billion open interest, especially with a quick increase, you know, you go into a bit of a short squeeze, but you don't really drop open interest, but you see a big increase of open interest at the high. Here again, well, on these two as well, intermediary, but at the very high again here. And so especially when you see this big increase happening in the very tiny range compared to what it squeezed to make the move up, right? If you understand what I mean. We squeeze that much amount of shorts, it produces that move up, and then we produce a less of a move up, and it produces a lot more increase in open interest, suggesting, well, FOMO and somebody on the other side selling, short selling with limits, right? So that's, you know, what we can be looking at again if it continue to increase here, especially and reach a high. It's going to be a nice confluence. That doesn't mean it's going to work again. At some point the range might break, right? And for now, this open interest range have been respected pretty well since end of August, but it's not like it's a lot. It's 1.5 billion, right? But you know, there is not a lot of liquidity here, and we are grinding up, so we'll see. We saw a larger squeeze in open interest in the past, right? This is kind of tiny, but normally this means two things. There is a position overall building. As you can see, we are making overall higher lows here. The high is capped, but the lows is uprising, so there is most likely somebody trying to fill a decent position here, and somebody's are gonna get squeezed. There is no certainty which side, you know, but you know that if you start to drop below the low of this week here, well, a lot of longs gonna get underwater and get, well, either liquidated or stopped out. And that can, depending if market makers bids at that moment and absorb the liquidation and close their shorts, or if they just let price go really deep into the liquidation, well, things can turn out completely. And if buyers keep pushing up, at some point the seller might just capitulate, or it will be a big increase back in open interest, but we can see a breakout. And in fact, if we look, also look at, instead of look, if we look at the Bitcoin volatility index, and thanks to James 2000X for reminding me of that as well. We are at a very low volatility historically for Bitcoin, and you can look at when we reach such low volatility where we were. So that was just after the breakout of the accumulation range at the beginning of the 2017 bull run. The time after was at 6K in 2018 before we capitulated to 3K. We're very low here as well, just on the other back breakout into the reclaim of the 200 daily moving average and back in bull run. Again here, after a really break out that range and started the real part of the bull run. And yeah, here we have the very low volatility happened at very key inflection point, and here again in August at the low. All of that to say, yeah, we can expect expansion in terms of volatility, I believe, either up or down. Now this is like a weekly chart, high time frame volatility, so that doesn't mean we have to break right away. But looking at the range where we are, the structure, etc., the level that have been tapped already, it seems likely that we're gonna get a significant move. If I approaching this from a Wyckoff point of view, well, you know, or just basically a range point of view, right? We have a range here. Accumulation or distribution, we'll see. Profile rather at the low, so it's a good sign for bulls, but yeah, apart from that, so we have a range, we have some kind of uptrust here, bull trap. Go back to take liquidity at the low. So that will be our test. So basically, and now this phase gonna be either a show of strength, either UTAD, uptrust after distribution, and that's gonna be settled depending where we're going next, right? Maybe we range a bit more. I think we are likely to get a break on the side, on one side. But basically, if it is a show of strength, while you want your backup at the edge of the creek to hold, right? So that would be, yeah, the previous resistance turn into support. Doesn't mean you can dive a bit into it again, but overall you need to hold that, right? You know, especially this. You can grab liquidity and recover from it, but you need to hold it. And if we start to see a move back, really back inside the range and acceptance, and start to go back into the low of the range, well, in that case, you will be looking for an LPSY to break down of the range. At some point, you want volume to increase as well, or to stay high, either on the sell side or the buy side. But yeah. So yeah, here I was just highlighting quickly. There is some relative strength we can see. At least it is, as long as this support hold, right? But you can compare this 4-hour candle with current 4-hour candle, and there is less volume and more gain upward that they were gain downward here. It's kind of the same here. You have a big volume as an initial squeeze, so you have a bit of distribution here, and you have a lot of effort for selling. You have one more candle of selling with high volume here compared to the upside, and yet it still made a higher low. In fact, that's what you can see as well on the open interest chart, as we're still holding higher lows. Yeah, on the open interest here, same principle, right? Used all of that. You compare the increase in open interest overall on the move up and the decrease on the move down. Oops. Do that always, because it's not the same shortcut here. And you can see, well, that almost a full reset of open interest, high to higher low here. But that's in between, because most of the open interest open at a very high. Yeah. a bit more obvious on the volume chart. Hey, Andy Alexander is here. Good evening. Yeah, 28K, we talked about that. I was kind of hoping for a bit lower. You know, I was, well, personally looking here, impulse, here, nice corrective, here, nice impulse. So kind of was looking for the 1-1 extension. Didn't quite get there, but I was surely looking at least for that liquidity. Hey, Queen is here as well in the MC. Good to see you guys. And all girls. I don't know. But yeah, so now let's take a look at the counts. Here we have one of the bullish count. I'm gonna do a quick recap. We have we're going for the bias here of the bullish case overall, right? I'm gonna talk a bit about the potential bearish case after on the higher time frame, but for that time frame, so we either have one, we printed wave A, and we did printed wave B already, or maybe this is gonna squeeze a bit higher to finish a lower high, and we can still see a wave C move down, final capitulation before going into the real bull run to go into the third wave. Option 1, right? For the wave, at least on that time frame, for the wave B, there's a few options. But option 2 is that we finished wave 1 here and we printed. Oh, there's an overlap of count here. It's not correct. We printed a flat and we finished wave 2 and we are already about to fly away. It doesn't have to go straight from here. You know, we can be more constructive, but we're gonna look at that in a minute. Now, if we zoom in, what is really compelling for the bear case here, just in terms of count, is the fact that we hit 1-1 extension, well, the pocket of 90% to 100% extension of proposed wave A from proposed wave B to C, right? So that's the kind of the perfect ABC move that you want to see for a corrective move, which make it compelling for this to be the wave B, and we are starting wave C down. Now, how you count this? Well, you will have wave 1 of C most likely here, and maybe a flat here for 2, and you start to go down. Or you may have another extension to the third, but yeah. Wildcard, yeah, that's the idea that we printed a flat here. So I was not really fan of the low the other day. Actually, it was a bit too quick for wave C. Now with the low of today, if really this hold, even if I'm not a fan of the count as a lower time frame, nonetheless we hit 1-1 extension of proposed wave A, projected from B to C to the tick. In fact, really, yeah, to the dollar. And so we have a valid flat as a wave B here, which can lead us into a C wave upward. We'll be looking at the 1-1 extension of a standard target, but it can go beyond, right? At that point, you probably want to look at liquidity above the swing high at 30,200 and so, and some change. You know, as I talked about a few times. The only thing is, well, we'll be looking to complete a 5-wave structure from our current low to the high it will potentially make. We need a lower high from July. That's going to be the invalidation that we need to keep in place to simplify things, at least. if we take it, we'll discuss it. The alternative. Yeah, alternative WXY, it's just a broad idea. Just the idea is that, well, even if we have a compelling 3-wave up here, it might be just the first leg of the correction, WXY or an ABC flat or whatever, that remain to be defined. But you know, as I said, I kind of expect the range to break one side or the other at the moment, so that's not necessarily what I'm gonna favor, but just to say, well, maybe we come back inside the range and we still hold it, or maybe we sweep the low for a flat, and you know, that can always a bit extend. So you know, if you get a short, you can take profit midway. You don't have to hold a good position down to a target that's not gonna get met necessarily immediately, right? Now for the bull case. Yeah, we don't that's the correction finished here. Well, the same, either we have a flat here, so the first leg gonna be a 1, and either we have a flat for the 2. In that case, we're gonna go into a 5-wave structure, but where okay, so we say, yeah, okay, great, but well, somebody comments something like this, like last week update, well, saying, okay, well, with Elliott Wave, anything can happen, right? Not really. In markets, almost everything can happen. Elliott Wave, we try to narrow it down. Some will narrow it to just one bias and be right or wrong, make a bet. Some will make a bit more, but there will be invalidation, and there will be hints about which one is the most compelling. How will we make the difference between an ABC here or a 1, 2, 3? Well, if it is going into a third, we should see sustained bullish volume. We should see, we should see yeah, bullishness across the board. And as we will be entering into the third wave of the third, that's the moment where like everybody can be right. Okay, so it's not necessarily the moment you want to fade the sentiment, but because it's gonna be so obvious and everybody's gonna be bullish. Personally, for me, one of the biggest signs will be to look at volume, and you can look at the structure as well of open interest, if it is gradually going up, or if, like we did here, it's just like big squeeze on or grinding up on low volume and nothing much moving, and then a big squeeze and a big increase all of a sudden of open interest. That's gonna, so if you got this kind of thing, grind up or big squeeze with low volume and low open interest change, and at the high you start to see a big increase of open interest but with no move, well, the wave C gonna make more sense. If it's more organic and going up strongly with more volume and OI, you're gonna favor the third wave. The target in that case, well, you can be looking at the 161.8, the 261.8, or even beyond, right? Probably will have still an extension if you go beyond. Readable, right? By that I mean you will be able to count 5-wave structure from our current low from today, and that's gonna be a smaller wave 1 of the third and gonna enter into the second wave. So we'll still be looking at probably the same liquidity level and see how consolidation happen if we go into another move on that. Alternatively, so just a slight difference, you know, it's depends how you approach the count locally, but as you have so much overlapping here, you have a lot of possibilities, right? But the simplest way is to just look at extension right away, right? And this as a 1-2 and this as a 1-2, and validation being the low here. So again, if we are in a flat locally and go back down into liquidity here and recover, well, the two going to be a bit low, that's it. And in that case, again, we can be looking at, well, 161.8 at least as target for the small third. And as will be extension, we'll be looking at the 261.8 most likely for the higher degree 3. Or even more if there's one more extension. Extension can build up along the way. It's just if we make again 5-way structure, pull back and go into a big move, well, most likely this third will not have been finished, right? And we'll add extension, and we'll look at the higher time frame target after. But mainly, if in any way, if we get out of this range to the upside, most likely want to look at that liquidity level around 30,250 and the high of July as well, July, right? Might be where you print a third wave. Now, if you are in this kind of bullish structure, probably the high, even if you do a small SFP, it's gonna take some time to build a top, a local top, right? So for now, we don't know how much extension there is, but it's possible that whatever it is of this scenario, you know, maybe the third gonna be a smaller one on that count. And whatever may happen is that we might print a wave 1 of that magnitude above July high and get some kind of consolidation at that point before going into the next leg and be still into the bigger third wave, because there is very high target if we're into the if we are going in for the bullish case here. The way it's gonna structure itself, well, I don't know yet. I can project a few and try to amplify them here, but I don't know exactly how it's gonna happen, right? So yeah, and on the downside, well, if we finished wave B here and we are going to break down the range, well, you might want to look at the 1-1 extension, so around 22k, 50% retracement, and around the 161.8 extension below 19,200 low to the 19k basically, 786 retracement even. You know, if you have kind of a capitulation event in confluence with some trade fi capitulation event, you might even have a wick down to the naked POC of that trend, right? And come really close to it. Well, that would be the idea. And if we are going for that and reject from the high here, well, we'll put again the fib extension, but overall the target gonna be pretty much the same, more about the horizontal target support level than the fib target for that matter. And the idea is just to print a higher low overall. And where is volume support and where is liquidity, right? You have a lot of volume support spread all around here. You have a low volume node here, 22k, and you have weekly support. I wanted to start with something else, but yeah. Queenie, what 2 amazing trades just following Elliott rule? Yeah. We got some nice trades recently. I was a bit doubting to take the long, but after the amazing show, the risk was must, and here we are deciding if close the trade or wait a bit more. Or at least take partial profits, that's for sure. And that's how I approach things all the time, you know. take partial profit, split my profit into many cut, right? Because most of the time we're arranging, but at some point we run, and I like to have a runner position. And even if you can make a bunch of money trading the little moves here and taking a lot of profits, if you don't take profit, you're likely going to get stopped tens and tens of times, and you just get wrecked and have nothing left when the move occurred. But if you take all profit, well, you can miss a lot, right? And even if you close 75% of your position on every ranging trade, at some point when you get a move that is 10 times the size of your usual move, well, even a 25% is gonna make the difference. And you can compound it as well when it makes sense. If you have some show of strength here and you have consolidation, while you allow you to maybe take a bit more risk and compound the position higher, knowing that your average is going to be way far away from the invalidation. And yeah, it's kind of nice also in terms of psychology, right? When it's mixing day trading and swing trading. Love the volatility. The goal is to stack the stats. Yeah, that's the way, Jenny. Exactly. Token trader, just saw this happening. Can I get a quick recap, please? Got long 27 to 60, aiming for 120,000. TP1, is that too much to ask? Well, I guess we're gonna talk about the high time frame. I'm not gonna do a recap of what I just said. You can just rewind if you like. But yeah, most of what I said is also what I already said earlier this week. Anyway, I don't think I'm forgetting anything. There is mainly two bearish option and two variation of the bullish one. One bearish option being that we break down from here, and one of the bearish is that we still have another move. And we'll see if we keep ranging. If we come back inside the range and we hold, well, we will talk about that in due time, right? Yeah, I was looking at the high time frame here. And you know, it's kind of a really weird place. So we see that we have very low volatility historically, and for a fact, I mean, we have been over contracting. Even if we feel like volatility is kind of kicking in a bit right now, the lower time frame, it's mainly because it changed the trend and the behavior here after 2 months of downside, and bulls are getting more rewarded than bears. But yeah, we are still at the 200 daily moving average. We're cut between the EMA and SMA. We are at the 3-day the same, and for the weekly it is the same as well. So it's it's such a key level here. That for sure, if you start to get traction to the upside, while you have this very bullish setup where you reclaim your 200 daily moving average, you retested it. Now you have a bit of a bear trap where you get back below it, and if you reclaim again, start to move, well, that's kind of your kind of confirmation that you're a new bull run, right? It's not exact science. It's nothing like this, right? You may have move above and get back in there, and have several move above and get back in there, you know. But at that point, we have the daily, the 3-day, and the weekly, right? Weekly, we never dipped below the 200 moving average before COVID crashed really quickly and before this event, right? And so right now it's a question: was this the bear trap below the 200 weekly, and now we are ready to go back again? Or was this just a bull trap with a retest above it, and we are getting back acceptance, and maybe we get even another leg down? It's not impossible. In fact, we're going to talk about it. Because, you know, stocks, well, for now they are holding. I'm gonna mainly look at S&P, right? I'm not gonna repeat the very high time frame, but I think we had a very high time full cycle top now. 21 guess if there is one more leg up or not. There might be one more leg here locally and still be into corrective if we don't reach all-time high, and still can come back down. And for that, this support is very key, because that's the previous resistance, right, in orange, at the 50% retracement of proposed wave 3 here. And so that's the support you need to hold, because I believe if we go lower, if we get acceptance back below 41.50 basically, well, I think there is high probability that we're going to get to the low, right? And that can put traction on everything, including Bitcoin potentially. Unless Bitcoin go into inverse correlation. I mean, it kind of tried to prove itself, its inverse correlation during the banking crisis. That maybe we'll have season 2 pretty soon or not. What's possible. And in that case, maybe that's going to be one of the trigger, right? And we could be into the move down in that case. Yeah, that's the alternative count, is that we finished an ABC move. In fact, I saw this week an update of Elliott Wave International. They're looking at similar thing here. Now, right now we had support, so you know we may have a bit of a trend, but can continue lower until we get back above September high, basically. Well, anything can be corrective up, and we can go back down. That can be just an extension, as it is key support in sentiment AV. That's where you may have a bounce, right? Corrective bounce, because people are just feeling a bit too much into sell. I think there's a bit overweight on the sell side on options, as I saw some tweets. Yeah, we have bullish div on 12-hour daily and below. Not bull div on daily, but rich oversold. And that's also why it really kind of need to hold support, because if that were to get lost, well, as soon as the 4-hour bull div doesn't work, especially, and we are also at the 200 daily here, by the way. As soon as your mid-time frame bull div in oversold territory doesn't hold, that's kind of a show of weakness as well. In fact, not kind of, it is one. So yeah, there is that. In fact, if we look at Russell, Russell didn't make any significant move up for this year. It have been a lot more ranging. It's a lot closer to the low. For a good reason, because most of the upside on stock is just because of the big 7 stocks, right? The Tesla, Microsoft, Apple, etc., right? And so the rest is not really moving. And as we have a complete move down, complete yeah, a complete move at that point, and now we are at what seems to be corrective. If we start to reach the low, well, most likely you want to go into a wave C at least, or a third wave. It is more bearish, but also very key to hold. That's sort of the confluence here, and kind of weakness we can see on Russell. And in fact, if you do not agree with me on my bearish bias in stock, maybe you want to be long Russell instead of S&P, right? Because if S&P is starting to go into new all-time high, at some point Russell is gonna catch up, and it's a bit zero or low caps. And at least here you have a tighter invalidation. Well, no, because the invalidation is also pretty tight here. But yeah, not financial advice, of course. So yeah, there's still this weight on stock that might trigger anything anytime. You know, I was looking at that Twitter account. In fact, it wrap up a lot of good doomish chat, and you can take a look at this. Might retreat some of them coming time, but yeah, there's still big inflation on food here, or orange juice. There was one really interesting this week, which was about unrealized losses. Can't find it. I'm gonna find it here because I posted it. There we go. Like $500 billion of unrealized losses because of the situation of the bond market, actually. %25% of all banks' equity. So that's quite heavy. And I mean, that's not the only doomy shot. That's why I say, yeah, you can take a look at this. But of course, you heard about the treasury market. Well, I will not explain too much here because I have a bit of understanding of it, but maybe not as much as others, and surely not with my English, but well, I can understand how this put pressure on risk asset, because it put pressure on the balance sheet of banks ultimately, and even other financial institutions. And it also kind of makes the smart money say, well, should I take risk on risk assets that are close to the all-time high, or just take a 5% return on just a cash investment, which is a lot less risky. Of course, one sensible guy will probably take the 5% sure return, right? I mean, at least as long as the USA doesn't do defaults, but yeah. And so the rising yield makes the bond price go down. And we also are seeing, I don't know if I still have the chart here, no, but we are also seeing the Fed selling out bonds, which is kind of the first time. And it's the first time we see such a epic increase of yield, right? For, well, all my life, basically. So quite uncharted territory right now. And things are likely to break at some point. We just don't know where exactly and how exactly. And what's gonna be the effect on Bitcoin, because even if DXY and stock go down along, maybe Bitcoin gonna take its own way as some kind of beta asset for risk hedging, right? You don't need much to make Bitcoin move much higher at this point. The liquidity is rather low, and liquidity is low. That's not necessarily a bad thing for price discovery. In fact, it's quite the contrary. It means that if somebody wants to buy $1 billion of Bitcoin, it's gonna struggle to do so without moving the price up significantly. So if there is 10 or 20 billion to be bought, gonna move price pretty fast. It's just a question of when they're gonna be big buyers starting to really market buy. Gonna buy through OTC, but that's gonna resolve into market buy. And yeah, when they're gonna really start to do so, and everybody start to join the party. At that point, that's why we're gonna see potentially parabolic movement just keep going on, and that's why we can also have this kind of multiple extension structure, where you may have a 1-2, a 1-2, another 1-2, even another 1-2, and you start to enter into the third of the third of the third, and it keep going, have a little wave 4 consolidation, and keep going. Because people are chasing bits. So yeah, we have potentially that structure, at least as long as this hold a support. As soon as it breaks, it can also move down pretty efficiently. Also because it is a very emotional market still. And as much as the lack of liquidity can be beneficial for the upside, with how leverage is the market, you can have easily a 10, 20, 30% move happening in a day, right? Just that it's probably going to be bought back. If we got such a capitulation, well, we have the idea of an ABC, and we have two interesting level. Now, where is the max pain scenario? Well, maybe it is a take of the low. If we were to see next week or next month or in 2 months, and we are not in a bull market and stocks start to fall apart, I might have something like the COVID crash and go into either pretty close to the low or into another leg down. We know there is there is also potentially a count down still valid, right? Doesn't seem let's say that no, I don't want to be the doom caller. I'm definitely not saying this is going to happen in Bitcoin, but I would not say it's impossible. There's such a certainty at that point that there will be a spot ETF approval. There is a halving next year. There's this 4-year cycle that have been happening again and again, and there's these big guys that want to buy. And well, maybe the max pain scenario is down. Maybe it is just front run everybody that is waiting for sensible level that are liquidity here or 61H retracement or POC or whatever, and waiting for a nice structure before going up. That's a simple case. That's scenario 1, ABC. Most obvious, the most simple. So maybe the max pain scenario is just to go out from here and start the bull run early, prior to this approvals and event, right? Or maybe it is a move down into POC here. It just have to be that case 1, 2, 3, 4, 5, something like this, we'll see. I will not exclude it completely. Also, why it is kind of sensible to be short where we are on that time frame. Being short and long, but at this level, it is more sensible to open new shorts. Like it was more sensible to open new longs when we were at 26K, right? Now, you see which side break, and you have one runner one side or the other. But yeah, when you got a good risk reward, that's where you take it. Indeed. You, some comments here I missed. Yeah, it good. Look good for Q4 Bula. Well, I guess I answered the question already. It's not that I'm expecting it. I just want to be ready for it if it happens. I say ideally I will want to buy 22k and 19k and or. But I am not opposed for current price action to be starting going into into new highs from here. And we'll see, there will be most likely other opportunity to position again on a nice long. Well, could have been one. It was a bit quick. Well, we're gonna see on the lower term frame. If there is an option a bit lower. But yeah, firstly, like make a projection here. If we have a wave 2 printed, what you have kind of your minimum target for a third wave, that will be 50k. In fact, that's gonna be your target for a third or a C still. It's gonna be liquidity about that high. You know, that can be the max pain scenario as well. You can start to go into the bull run, you get your ETF approval, you get your last spike, and up, you print an A, B, C, and you break the cycle. And the big guy gonna buy all the capitulation. Who knows? But otherwise, kind of the minimum target you would see, right? It's a 161.8 extension. Here it's on linear scale. I would rather take the log scale as a more classic target. So 161.8 gonna be new all-time high here. It's gonna be at 77, and it can go even higher. You know, I don't know how bullish we're gonna be if we go in the bull run. That's a characteristic we'll see on the leg. Depending how the leg behave, we're gonna try to count it sensibly and see where we have our wave 4 consolidation. But before I can read anything of it, I can just pretend to project things. In theory, it could go to millions, but that's not. I mean, some guy is calling for it. I think it's a bit too much, but yeah, 75 is kind of fine. It could bring your wave 4 consolidation after you take the high and go into another fifth that can go into another extension. We'll see. Yeah. You know, overall, watching for the 100, 250,000, it's not stupid for that one, I think. It's kind of what I will be looking at now. New all-time high, you might want to be prudent. And depending, again, when it happened, what is the news event at that point, if you got the launch of the ETF at just when you break all-time high, that might be a buy sell signal, just like the Coinbase listing here at the very high. Just like the first CME market at the previous very high. At the 2018 high, right? So maybe that the bullish ETF narrative gonna be the high when it is accepted at our launch. I think it's gonna be pretty close. I'm not a low specialist, but yeah, I think when it gets accepted by the SEC, it can launch pretty quickly. And so yeah, that's classic targets. Now, if you go into another C before, we'll pull the fib at that point when the C is printed, right? Okay, I just can't do this projection for now because I have a suggestion for 1-2. Here we go. Now lower time frame, quick look. If we get a move down, if we don't break Monday high, and we get a move down, well, I'm gonna pull your fib from wherever the high here, even either a deviation of yesterday high, either the high of today, and we're gonna be looking at the 1-1 extension basically as a general target. 190%, and it's gonna send us into this. Yeah, into this kind of wick here. We can even sweep it. I don't know if I'm gonna long that yet. Golden pocket 786. There's a 786. That's kind of nice here. Yeah. Again, I will want to count my structure from the high it would be. Try to read some kind of finish, bullish div, and maybe look for a reaction. Not necessarily have to knife catch some things that keep dropping, right? You might want to wait for some kind of market structure change and buy a higher low to continue. But that's still level to potentially buy, because in that case we still have, well, this has a 1, 2, 3, 4, 5, yeah. This has a potential wave 1, and whatever will be printing here as an ABC wave 2 basically. It's kind of hard to me to say exactly now where would be the best level to buy. But yeah, 26,570 look pretty tempting. Maybe 26,900 will be enough. Some item from level here. Yeah, weekly open, monthly open. This month open, yeah. In terms of weekly, it's a lot lower. That's daily order block consolidation. It's also prettiness. Basically, if you get got a deviation below your lows here, that's a nice buy. I will be looking at open interest. What is the behavior at that point? And volume, etc. If open interest start to drop below support and volume seller keeps coming in, and there is high spot selling, etc., maybe I will be patient and at the risk of buying back higher and have a bigger invalidation, but wait for bigger, nicer confirmation. The confirmation will be to reclaim what is support right now, go below it and reclaim it, and that would be the nicest long you can take. If you have a clear validation, and you can take a partial profit at the high, but probably take it back to 30,250, right? And if we're going to break the high on the high here on this move without going down, the structure is also not great to read here. It's just a 1-1 extension so far. Well, Elliott structure side, if you get a move above here, I still think this can lead you to consolidation. In that case, maybe buying after consolidation. Well, you all have almost always the same thing, right? You will have a low time frame reversal and start to make a bit of a range, and you will take liquidity and the same kind of buy here. Just the same thing that I was pleading here. Well, that is not the ideal structure, but that's kind of the same shape, right? You have your market structure change, you have a bit of a range, and you come back, take liquidity down. Ideally, you will have printed nicer ABC structure, a bit deeper, but yeah. That's last week we were here. We kind of had a similar thing, yeah. We still have a bit of correction to the golden pocket, to the local golden pocket, I think, 786. The structure doesn't really allow me to project precisely a lower term frame into 2 days here, unfortunately, so that would have to be reactionary. But these are important supports, clearly. Peace. Okay. And yeah, here's still a good shot to defend the high. Same, well, you can have a take profit here, and depending where is the high, well, you can put it at break even at any point, as soon as you take your take profit one, and have 1, 2, 3 take profit maybe, and have some for a breakdown. Another take profit below the low here at the weekly. But yeah, something like this I will do, right? 1, 2, 3, 4 take profit and 25% to, or 20% to run. Now maybe a golden pocket retrace if you get one here. Can be an edge. Or maybe and such a thing happen, I would be willing to take another short here, a bit tighter, have a take profit at that kind of sensible level, golden pocket POC, and maybe hedge into a long at that point, at the risk of risking this 1.5%, but I'm able to pull a good shot here. That's kind of okay. You know, the risk in such choppy environment is to get chop out, right? So in terms of structure, I have clear invalidation. Well, for that I will want to see some kind of reaction, right? But of course the risk is to see a move that do this and do this, right? And you get stopped both sides. It's not gonna be good. Or having this and go here, got stopped on the long, and then it reverse. I don't really have the, well, yeah, maybe, but that's indeed where I would be willing to long as well. But that case you get stopped, what you do? Do you long again here, don't take profits, and things doesn't hold, and quick back here, and you long again, take profit, and It's an iffy situation for that. Well, that's what you have to take profit on the short side, even if it means just paying for your long stop losses. But I guess as we have a bullish market structure, it's still fine to be long. And here you know, I don't know what gonna be the market circumstance when this happens. Maybe I will not pull the trigger, or will be more prudent, or will take a quicker take profits. Not necessarily just long for target to the high and let myself get stopped first. If I see there is no real follow through, well, maybe I take most of the profit and I'll let the rest get stopped, you know. But that have to be reactionary to the circumstances of the market. Am I already in? I'm in long still. I'm in short in long, yeah. And you know, I was long from 26k mainly. There was another long last week, main long that I took on Friday, right? We were here. And around 26k I had a long from here. So that I got stopped out on that move down. I had my stop, I don't remember exactly, I think, yeah, that was below that low. When we had that reaction, I got the stop below. And here, well, when I see it get stopped out, I started to take back the same position, basically. Yeah, I almost get stopped out here, but ultimately I rarely put my stop at the very low, so it didn't trigger on that. So thankfully I'm still long for that. After, you know, I took scalps here and there. I just cannot share all of them because it's really, you know, I go long, I take profit, but the time I share that into Discord is just, well, I will have to take my take profit well, say I took a long, right? So it doesn't really make sense. In draws, it's also good if I share a chart with it. So the time I draw, I clean the chart up and I draw it cleanly to say why it took so long and explain it. It can be too late. So I try to prepare the cleaner one. But I'm in a short also from weekly open. In fact, I did miss it here. I wanted to take one and didn't really. No, I got stopped here. I kind of messed up on that one. But yeah, I've been short on the weekly open. Again, best short's gonna be, well, if you reach that trend line, take your aggregated open interest chart on CoinAlley's Bitcoin open interest. Check everything is set alright, but yeah. And you can draw the line as well, you know, for now. The trick I've been working 1, 2, 3 times. Well, mainly 2 times here, because that prior to this, that was not really a trend line, but the trick of having a big increase in open interest in a tight range, that's necessarily the trick. Right now we have a trend line, so that's what you can watch for a top potentially. But we already have a lot of mess on my chart now. Already have a lot of open interest. It's opening from a bit lower here, or maybe you want another increase and it doesn't go up much. I don't know. Founding is going back up, so yeah, it's looking rather nice for short. It's just it can go a bit higher still. in terms of count, maybe we have a 1, 2, 3, 4, 5. So maybe one more 5 takes a high, and that's a bit short, yeah. Deviation of yesterday high, basically. Okay, here we go. I guess that's gonna be all for today. I cover pretty much everything and anything. Yeah, Tether is not really buying up here, which kind of, that's one indicator. It can be selling for a long time and just sleep, but and the other time it was buying, it didn't hold. But worth noting that the Tether thing, the Tether wells are not just buying at a premium. That might be also due to the gray market, China gray market, where there's some eagerness to sell Tether. Yeah, that's pretty much everything. I've covered too much things anyway, so I'm gonna stop here. Thanks for joining, everybody. It was a pleasure to have you all. I hope I didn't miss any question or comment, but yeah, appreciate you all. Take care and see you very soon. Bye bye.